What's good, traders? The Qs are finally starting to show signs that momentum may be cooling off after that massive vertical move higher. And now the market is sitting at a critical decision point heading into tomorrow. Starting with the daily chart, bulls are still technically in control because the Qs remain above major breakout structure. But for the first time in a while, we're finally starting to see hesitation near the 722 highs. Momentum is no longer moving straight up effortlessly, and that's important because once strong trends begin slowing near highs, the market becomes vulnerable to sharper pullbacks and trapped late buyers. Now moving over to the hourly chart, this is where things started changing more clearly. After tagging the 722 highs, the Qs began putting in lower highs and weaker continuation candles. Instead of aggressive bullish displacement, price started transitioning into more corrective price action. That tells us momentum is beginning to cool off, and honestly, the late day bounce looked more reactive than truly strong, meaning buyers bounced it, but they still have not fully regained control. Now drilling down into the 5-minute chart, this is where execution matters most. Sellers controlled most of the session after the Qs rolled over from the 715 area and flushed all the way down near 700 before bouncing late in the day. But here's the key. That late bounce still has not fully reclaimed the main breakdown zone, which means the Qs are now sitting directly in a reclaim or fail setup heading into tomorrow. If buyers come in strong at the open and reclaim the 707 to 708 area with real momentum behind it, then bulls may have a shot at pushing this thing towards 710 first. 710 would likely be the first partial take profit area for aggressive longs. If buyers can break and hold above 710, then the next major resistance zone becomes 712.98 into 713. That would likely become the second take profit area and a possible reaction zone where sellers may try stepping back in. If momentum stays strong above 713, then bulls may attempt a move towards 715. 715 would likely become another partial profit area because that was the prior breakdown zone before the larger flush lower. And if buyers continue showing strength above 715 with continued acceptance in volume, then the larger upside target becomes a retest of the 722 highs. Now on the bearish side, if the Qs reject near the 707 to 710 area and begin printing lower highs again on the 5-minute chart, then sellers may regain control quickly, especially if price loses the 702 to 700 area. At that point, trapped late buyers may start exiting positions, and that could trigger a larger unwind move toward the high 690s. For bearish execution, aggressive shorts would likely trigger on confirmed rejection and roll over below 707 to 710. First downside target would likely be 702, followed by 700. If sellers break below 700 with momentum, then the next downside target becomes the high 690s. Logical stop placement for aggressive shorts would likely be above 710 or above the local rejection high. Right now, the Qs are sitting at a major decision point, and the next move from here could set the tone for the entire week. Stay sharp, traders. This is Tone, and I'll catch you in the next one.